Hi, it's Jerimiah Taylor here with your January 2023 housing market update. Now, I don't know about you, but this has been the craziest market that I have seen in the 22 years that I've been doing this. In January, interest rates came down from 10-year highs. Home inventories started to trend back up, but nowhere near as much as we'd expect, and home prices actually started to find their bottom, and in some markets even came up a little bit. So let's dive in and look a little bit deeper at what happened at the end of 2022. The first half of 2022 was actually one of the strongest spring markets and summer markets that we've seen. The back half of 2022 told a very different story. What you'll see in the graph here is we ended the year with 5 million homes sold. That's a 17.8% change from the previous year, down. We were over 6 million homes sold the previous year. Those homes sold at a median price of $386,000, which is actually a 10% increase year over year. That's the average home sold over the course of the year. But what is key to understand about that is from December of 2021 to December of 2022, home prices were almost flat. It's pretty unusual, and we're going to look a little bit more at why that happened and what to expect in the coming months. Now, inventory is a really interesting thing because we keep hearing how we're supply constrained as a housing economy. I got bad news. We are still supply constrained. In fact, we closed the year with 2.7 months of inventory, which is well below the 20-year average of 5.4 months of inventory. Now, I want to point out something interesting about home prices. As you see this graph here, the median home price has a fairly predictable trend throughout the years. There's this nice seasonal up and down. Now you can see a window in time where we went backwards from 2008 to 2010, but from 2010 to now, home prices have generally done the same thing up until we got into the pandemic. What the pandemic did for housing prices is actually really interesting. Take a look at this heat map. What you see, there's this long green line out on the right side at the end of 2020. The pandemic shifted our traditional seasonal selling patterns to where we saw unparalleled economic stimulus, and we also saw demand shift out towards the end of the year where we don't normally get it there. And so 2021 was kind of a return to normal seasonality. 2022 was that even more so. Now, the furthest right bar in this graph that you just see on the screen is what I'm calling H2 change. It's how much did home prices change from June to the end of the year. What's interesting about 2022 is we had the most significant downward adjustment in home price in the last 6 months of last year since the Great Recession. The only other time we've been in double digits, which by the way, we're at 11%. Prices declined from June to the end of the year by 11% nationally, median home price, was in 2008, which you see here was at 18.3% decline. Now, what's interesting is that doesn't mean prices went down year over year. In fact, when you look at this heat map, what you can see is prices actually went up by about 2% December to December. So even though we had this big pullback in the back half of the year, we still made positive gains when it came to price. So why did this happen? What's going on with this? Well, the answer all comes down to affordability. When you look at this chart, you can see there's a huge spike in affordability that comes in the middle of 2022. Well, what happened? Interest rates. They went from 3% to over 7% in the really short window of time, call it 4 months. Well, there's something else really important that happened here. When you look at this chart here, the orange line represents the median family income across the United States, and the blue line represents the income needed to qualify to buy the median home. Something really interesting happened in the second half of 2022, and it's the first time we've seen this happen. Now, this data set goes all the way back to 1989, so it could have happened before that, but since 1989, this is the first time that the average family could not afford to buy the average home in the United States. This is a really big deal because what we need to happen is we need wages to continue to grow, and you need prices to soften, and you need interest rates to come down to get this back under control so that we can get the buying power back so that the average family can again be able to afford the average home. Now, here's the great news. When you look at this chart and we see what's happening in January of 2023 in this price and rate forecast, I'm projecting, now as of the third week of January, interest rates from Freddie Mac were said to be at the 6.15% range. I'm projecting prices declined slightly further from December to January, which is expected, and that we're going to end around $360,000 as a median sales price for a single family home in the US. Now, we won't actually get that data till the third or fourth week of February, but when you look at this projection, what that means is things are getting better. Homes are getting more affordable because we also expect wages to continue to rise. We see we have a healthy job market. Now, some of these major tech companies are starting to have layoffs, but we don't expect those effects to be realized in the data for several weeks or even months at this point. And the great news is mortgage purchase activity is up. The Mortgage Bankers Association has reported throughout the month of January that we've seen week over week gains as high as 28% in the amount of purchase mortgage activity, which that's the strongest leading indicator of what's to come in the next few months. So let's wrap it up. At the end of January 2023, housing market is improving. Homes are quite a bit more affordable than they were 6 months ago. And most importantly, if you follow this series of videos, what you will see is that history tends to repeat itself. And we know that in the spring and in the summer, home prices will rise. There's only been 2 months in history where home prices didn't rise in spring and summer, and it was in 2009 and in 2020, 2 months where prices didn't go up. Net from January to June, they always go up. And so expect home prices to rise, expect increased competition. And if I'm a buyer in this market, this is my window of opportunity to take advantage of what's happening in the market. Stay tuned. We'll be back next month with another real estate update. Signing off, it's Jerimiah Taylor.